Here we have the current stock market update for Broadcom Incorporated, stock ticker AVGO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So here we have the 4-hour price chart, and each candle on this price chart would represent a 4-hour trading period. So it's a bit of an intermediate term time frame. We're going to sort of take a broad view of the stock and see how things stand currently. Share prices have managed to post a fairly strong rally here after posting those prior lows that came in just below 135. So in this video, what we'll be doing is identifying some important support and resistance zones and some key price levels so that hopefully traders can develop positive and profitable trading strategies for this stock going forward. So as we can see here, this movement from just below 135 was quite significant because overall what we were looking at here was the 78.6% Fibonacci retracement of the move from 128.50 to 172.42, which comes in rough contact with this price region here. We did see a bit of a break below that level, but not by much. And since share prices were able to rally so convincingly following that price test, we would have to call this area here. We would have to consider this to be a false breakout to the downside. That 78.6% fib retracement was seen right around 137.80, and we did see share prices fall below 135. So there was definitely a break here to the downside, but for the most part, it was short-lived. And when you see a resulting rally like this, it becomes, it has to be defined or categorized as a false breakout to the downside. One reason that we can also look at the stock this way, the stock price movement this way, is because this prior price movement here did result in a fairly substantial price gap to the downside. So what this means is that the stock itself was encountering a very strong, high level of volatility. And for a name like this, that's not really common. This is sort of a more boring, conservative, stable type stock. This isn't really an excessive mover or a high volatility type stock. We don't generally see price movements like this in Broadcom. So the fact that we did see this major price gap lower, and I should also mention that this did occur after a positive earnings report. We don't normally see price movements like that in this stock. So this increased level of volatility here does increase the likelihood that false breakouts in the direction of that prior price movement become more likely. The possibility for stock slippage and things like that becomes much more probable at that point. So not entirely surprising to see that there would be a false breakout during an event like this. I mean, we're following a positive earnings report. We're seeing major price gaps lower. These are volatility levels that are not typically seen for this stock. So, all those things together make it much more likely that you could encounter a false breakout to the downside. And that is what occurred here. So this movement upward here is now the real trending movement. The valid price movement. And as we can see, this has forced share prices above the entire exponential moving average cluster on the 4-hour time frame. In addition to that, we can point to the indicator reading at the bottom of the price chart, this purple line, and we can see that recently the relative strength index did manage to overcome its prior downtrend line, which suggests that this prior trend in negative momentum, bearish momentum, is no longer controlling the stock or influencing this stock. Now, that's not to say that share prices can't develop a new negative trend, but what this does mean is that the prior trend, at the very least, has run its course, has completed itself, and is no longer influencing share prices. So, we do have some room here before we start to reach overbought territory. Currently, the relative strength index is holding right around 58.7. So there's a fair amount of room here to continue to extend to the top side before share prices would actually start to become overbought and before we would start to be concerned about a major reversal lower. Early to start this week, we did already see some negative movement to the downside. In my view, this was probably inspired by the downward price trend that was seen in NVIDIA early in the day. We have recovered a lot of those prior losses here, so we are starting to move in the upward direction. And currently, the main resistance level now to the top side comes in at 168.08. That would be the price high that was generated during the February 13 trading session, so Friday of last week. And then from there, if we were to break above this 168 level, the next clear area to watch to the top side does come in right around 172.42. This would be the price high from the August 22nd trading period, August 22. So this is a very significant price movement here because this was the prior resistance zone that was seen before we did ultimately see this major price movement lower below 135. So we are heading into some very important resistance zones at the moment. In addition to that, you are seeing a very strong price movement to the top side that hasn't really seen much in the way of a downside retracement. We really don't see very many red candles in this upward price movement here. So after falling below 135, share prices really almost took a vertical run higher here. So at some point, we do have to expect to see a bit of a downside retracement here. I mean, we can't just move in one direction forever. But as things currently stand, there really isn't much here on this chart to suggest that a major price movement to the downside is imminent. So for those reasons, I would expect to see this 172.42 level tested here relatively soon. Unless we start to see, some sort of signal here in the momentum reading or something. I mean, possibly a movement back into the exponential moving average cluster could start to reverse the bias a bit and turn things into a more neutral, consolidative, sideways direction. But as things currently stand here, there really isn't much on this chart which would suggest that share prices are ready to make a substantial run to the downside. So overall, I would probably need to see a movement into at least roughly 155 in order to possibly start to consider, a more neutral sideways trading bias. But if that doesn't happen, the next level to watch to the top side does come in at this 172.42 level. And then a break above there should target share price resistance levels that are about $5 higher. So here's the current stock market analysis for Broadcom Incorporated, stock ticker AVGO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.